Hey guys, I'm Manisha Gupta and a very happy new year to all of you. And I want to talk about the metals as a sector which did not do much for the last 6 or 7 years but came roaring back in 2021 with an outperformance that beat various other asset classes as well. I'll start with aluminum, which gained 42%, and this has been the biggest gain since 2009 that aluminum as a commodity has put out for 2021. Zinc was another one, nearly 29% of gains for this one as well, and this has been a biggest gain since 2017 for zinc. 2021 also saw 25% of gains for copper. This is over and above 26% of gains in copper in 2020. And then you had nickel, the battery metal, gaining 25% in previous year. This has been the biggest gain since 2019 for this one as well. Lead gain 15% is biggest gain since 2017. There have been various reasons for the markets to be running up. There was a lot of pent-up demand with factories, manufacturing areas opening up and metals being in demand there. High power prices, whether you looked at electricity, coal, natural gas, everything was running up, and that led to cost of production and metals also running. Smelters cut production capacity on high energy cost, and high energy cost made their way into metal prices. So both ways we saw prices gain up. Also, output curbs to reach the carbon emission targets was yet another reason that various countries started to curb production. And then there was lower mine supplies, declining inventories, surging demand, all of that was supportive. China was yet another major factor. We saw demand here continue, and demand from other countries also seems to be picking up. I want to talk about each metal individually, starting with aluminum, and 60% of aluminum production comes in from China. China has cut the smelter capacity of 3.8 million tons, and the markets are looking at supply disruptions, not just in China, but in Brazil, Jamaica, Europe. On warrant, LME stocks also are at a 2005 lows, and we have seen high energy costs lead to production cuts from major companies like Alcoa, whether it has been Glencore, Norilsk, all of these have cut metal output there. If you look at the outlook then, and this year is expected to be pretty on the higher side as well, World Bank for one expects 6% of a jump up in aluminum prices from the average that we saw in the last year. And then you have Fitch Solutions, ING, Bank of America, all of them expecting aluminum prices between $2,900 to $3,100 per ton on the higher side for this year. Talk about zinc, and it faced the same problems as aluminum. We also saw production cuts into this one. To name a few, Nyrstar, Obi projects cut production. They are from the month of Jan itself, and the production cuts or halts are expected to be there for this quarter. Glencore, Italy, zinc sulfate operations are also on hold. So when you look at the global refined zinc market, it's expected to be in a deficit of around 93,000 tons in last year, and the deficit is expected to continue for this year as well. The LME stocks are at a 17-month low, so that also has been supportive. So when you look at this year in sense of prices, Citi predicts 100,000 tons of deficit. Global markets in sense of refined zinc also are expected to see a deficit, not just in 2022 but 23 as well. So this is one metal to keep an eye on. In sense of prices, we took reports from Fitch, Bank of America, JP Morgan, Citi, Argus, and they're all very bullish when it comes to zinc. Anything between 2,900 to 3,300 on the higher side is the call coming in from zinc, and most bullish of all the quarters in the year is going to be this current quarter. So zinc is the place to be in the first quarter of 2022. Nickel then, and lower output from the major producers, whether it has been Norilsk or Whale, has been supportive in this as well. And countries like Philippines, Indonesia are producing enough nickel, but they want to process it within the countries and not export so much. So that is what has led to global markets rising here. International Study Group also says that the global demands are expected to increase. Production is expected to lag the kind of demand the markets were anticipating. So when you look at the outlook here as well, and we have reports again from Bank of America, America, ANZ, Wood Mackenzie, ING, they expect the nickel prices to trade 17,000 on the lower side to a bullish Q of 22,000 on the higher side as well. The most bullish Qs from nickel are coming in from Bank of America, ANZ. They expect the nickel demand to get stronger because of the energy transitions and also because of the battery demand, stainless steel demand continuing strong. Finally, copper, well, we did see a couple of last years being a strong one on this. The availability is expected to see a bit of a surplus though going forward, and that could keep copper into a consolidation mode in this year. 2020 and 2021 were huge deficits, but in 2022, there is an expected 328,000 tons of a surplus being built up that could keep prices in check. So you have reports from ED&F, Commerce Bank, Julius Baer, Stancy, Liberium, and they are not expecting prices to touch above $10,000 per ton. In 2021, we've seen an all-time high of $10,700 per ton. All of these banks and brokerages expect the copper prices to trade anywhere between $8,000 to $9,800 a ton. So pretty much a consolidation is what you can call this year as going forward. But there is so much uncertainty as we step into 2022. Chinese demand is going to be one thing to watch out for, even as various other global central banks are talking about, tightening monetary policy. China is still talking about easing it further. Chinese property market, China policy, China energy transition are some of the things markets will keep an eye on, because when it comes about metal, China is your major market to watch out for. The decarbonization policy is not just about China, but various other countries as well. So the kind of investments that we will see in mines and metals demand will be yet another factor. And then inflation is high. The rate hike cycle is going to be, will mean that much of the money perhaps would start getting sucked out of the system. That could weigh onto the metal prices. And the major criteria would be the COVID variants. We seem to be fighting yet another one right now. 2022, what that brings up and how do the governments tackle that would really tell you on how asset classes behave. But right now, with the kind of factors and fundamentals that we have and that we can foresee, the expectation is that this year could yet again be a year that you could see strength in metals, especially aluminum, which is top of the charts, and the other metals could be looking at consolidation or buying on dips.